Yo, what's up, guys? Long time no see. Um, been out of commission a little bit, had some things going on, but still gonna have some things going on. But I'm a little bit back. I was able to look at the charts yesterday for a little bit. Um, but honestly, have not really been on the charts. I don't know what anything's doing. But I did see something yesterday that, in my opinion, was beautiful, perfect execution of a trade. Um, or what would have been a perfect execution for a trade. So let's go down to, we'll go up to a daily and try and figure out what the hell's going on, right? So this whole week was pretty much consolidation. Yesterday is where we got not yesterday, sorry, Wednesday is when we got the Fed rate. So obviously we know we're not trading before Fed rates, or we shouldn't be trading before Fed rates. And that's when, um, once Fed rates came out, that's when we decided which direction we're going. So you can see here that clearly pushed a little lower into this first line of defense FEG. You have these equal highs that were sitting here for forever. And you can see those better on a 1 hour. So when I cut down there, you'll see it. Um, but yeah, yesterday morning was probably the trade of the week, in my opinion. Let's go to 1 hour here. So on a 1 hour, we see we have all these equal highs over here. Let me label those so we can see them. We've got these equal highs here. Liquidity. Oh, there it is. Liquidity. Boom. So that's pretty much what we're looking at, right? We want to come up into this area. So coming into yesterday's PA, we've already taken liquidity, right? You can see this is the FOMC, 3 p.m. or sorry, 2:30. Come up, we take these relative equal highs, we push lower, we sweep the sell side liquidity, and then we're just expanding the whole time. So now in here, right, this is where the meat and the potatoes of the trade idea really comes together. Is we only have one FEG available, which is this one. So that could be an indication like, maybe it is we're looking here. We may want to come a little bit higher, right? So let me do that FEG. There we go. So we have this FEG in here. Price comes in, taps into it at 9 o'clock. So let's go down to let's actually go down to a 5 and see what we're seeing, right? So on a 5, whoops. On a 5, we know that we are technically still bullish, but we know that in order to go long, we need to take some form of liquidity. If there's no liquidity taken, no trade. So we can see 830, sorry, 905 here. We take equals, somewhat equals. We push higher. 930, 9, 930. All right, we get this nice push bearish. Price comes into the FEG. Both FEGs respects it, pushes higher, fails to close above. Um, and that failure should tell us that we need to take more liquidity. That's how I look at it. Price came lower. We have these relative equals in here. This one, this one. Price comes into that H1 FEG and gives us a tap. We can see that's a really nice rejection there. But the meat and the potatoes, or the entry, all the analysis, that's all higher time frame analysis, strictly based off of where are we most likely to go. And in this bearish leg, the push for liquidity, the push to sweep liquidity, we have a couple things going on. We have this inverse FEG here, inverse. All right. We have this inverse FEG here. Price pushes down, sweeps the liquidity. Price pushes above the inverse FEG, taps back into it, respects the 50%. See if I can put that on real quick. There we go. Comes into the 50%, respects the 50%, and then pushes higher. So because we respect the 50% so beautifully, that's just even more of an indication to go long. But this is how I would have taken it off of like this, covering the point, the liquidity was swept. Or really and truly just you really need to cover the inverse FEG. I mean, price can wick it, but the moment we close below, that's game over if we're being honest with ourselves. And targets, right? So we have our low, we have our high. That's clearly our manipulation range. This is the last point that pushes us into liquidity and ultimately into that H1 FEG. And we look to target the two standard deviations of that. So like that, so there, right? 4.9, when I looked at it last night, it was 5 point something, more like that, 5.06 R, all right? And we tapped out there. Actually, when I did it last night, we tapped out here. So it's probably a little bit lower. Oh, I had it. Yeah. So yeah, we were tapped out on that wick right there. Like that. And that would have been the trade yesterday. How I would have taken it. If you didn't want to take that first inverse FEG entry, there's definitely another entry in there, which is based off of the change in save delivery. So how kind of erase these. So we got 5R on the first one. Let me just delete this for a second. How we would look at this is we have our change and save delivery from here. I'm not sure I have a thing for that. No, I don't. So I'm just going to use the OB tool there. We have our change and save delivery. How we can look at this is we have one FEG available. This should be our protected low. So your entry would be off the FEG, covering the protected low, which is our ISP. Target is the same target, so two standard deviations, which is here. And this is a 5.2 R trade. Pretty much the same exact trade. Very close entry, right? This one's at 10:10. The first entry would have been at 9:57. So both of them within what's that, 17 minutes? And both of them are valid and both of them are within my time range of when I like to take those entries. Same target thing and you're tapped out, right? So yeah, two really, really good entries on price yesterday after Fed rates. And that is pretty much what I just saw last night, just kind of going through the chart. Um I today probably not gonna be on the chart at all. Um but if I had to guess, I would let's just look here real quick. If I had to guess, we're probably going to go higher. Uh, yeah, I think we go higher, and I also think we take these all-time highs. Are these all-time highs? We take these highs from August 22nd. I think that's probably going to be the move for the day. We'll probably come back in and then look to push higher. And yeah, guys, that's pretty much the analysis that I have. Hope everyone has a good day.